What is up, everybody? Good evening. Happy Sunday. I hope everyone's weekend has been wonderful. Welcome to Market Kickoff with Nick4ATick. I am Nick. How is everyone doing? How was everyone's week last week? How was their trading week? Look good, sound good. Quick check before we really dive in here. Looks like I'm getting a thumbs up from the chat. Let's talk a little bit about why we are here. This is Market Kickoff. We're going to go over the last full trading week of the year. Looking back at this year, it's been kind of a wild one. It's still one of those where if you look at data, if you look at seasonality, if you look at, how the market typically performs with the S&P getting whatever the historical average is, what is it, like 5% return? You pretty much just throw that out with the baby and the bathwater, because this year has been the absolute biggest outlier I've ever seen since I've been trading. It's just been up and to the right. You had that, whatever you want to call the 2-day correction we had with the Bank of Japan back in August. And ever since then, it's been, absolutely off to the races. So as we are approaching the last full trading week of the year, obviously next week will be a somewhat of a lower volume, abbreviated potential sessions with the Christmas holiday, and I think Hanukkah starts on the 26th or 27th. I don't remember. Somebody, if you do celebrate in the chat, please let me know, because I actually do not know off the top of my head where it falls on the calendar this year. But given the holidays and then the following week going into New Year's Eve, it kind of is just, we'll see how the market really wants to wrap up here. But this is the Super Bowl of a last full trading week of the year. It's rollover. I'm still going to be on the Z contract, at least for, we'll see what I wake up to tomorrow morning. But we got rollover, we got FOMC, we've got PCE, we've got retail sales, we've got GDP, and we got options expiration. So what a week to pretty much end the year here. Yeah, so that being said, this is Market Kickoff. We are going to go over some light prep for the week, dive into what is on the docket as far as earnings. There are a couple this week that could move the markets. We're going to talk a little bit about the data releases, the FOMC. We'll talk about the options information, since this is a week where it probably will matter more than others as far as the gamma data that we usually talk about. And we will get you guys prepped on the big four. And as always, if you have questions as I'm going through everything tonight, feel free to throw them in the chat. We will get them answered. We will, have time for just about everybody that wants to get something, any questions thrown out to me in the chat. I'm happy to discuss, answer it to the best of my abilities. Even if it is not, if I'm not the best person to ask, I will still hopefully steer you in the right direction. So let's get going here. Let's talk a little bit about last week. And I already see somebody in the chat asking, how do we roll over in Topstep X? You don't have to. Once the, the platform itself makes the distinction that it's time, it will roll over automatically. The new H contract for March will be available. But the reason it probably has not already rolled over, it may when we switch sessions here, but do be aware, going into the close on Friday, we still were more heavily volume on the Z contract for the December expiration. So until I see that volume flip, I ain't rolling. And I usually roll tonight. The Sunday before is usually when I would always roll, but I haven't seen the volume flip just yet. That may have a little bit to do with positions kind of rolling over. It may have a little bit to do with the Christmas holiday. It may have to do with the fact that we're at all-time highs, and it may be weird how people are rolling positions. I have no idea, but the logic is the usual way to do it is to check the CME's website. You can see how the volume is shifted across the two contracts and make the distinction there yourself, or wait for, if you're on Topstep X, for the platform to roll us over. I would imagine by some part of tomorrow's session, it will be flipped. It usually is by Monday. It typically is when we would fully see people moving over. But when it's about 50-50, I'm pretty hands off, guys, just to be perfectly honest. It gets a little weird. It gets a little jumpy. So do not be jumping out of the gate would be my advice to trade trade futures when volume may be split 50-50 and 60-40 at times. When you start to see that larger flip over, that's when you can usually feel pretty confident to go ahead and, jump over to the H contract. So for the time being and tonight, we're going to talk about Z. Obviously, my levels may be a little irrelevant if we do roll over here in the near term or tomorrow, but you can always still jump back. It's kind of that weird first day or two where I'm still jumping back to Z visually just to understand where is it sitting at, if it's at 6130 or something, what exactly is that on the Z? So I have a rough idea of, what is that level? What are those areas that we were trading previously for NQ and ES? But let's jump into the prep. Let's talk a little bit about last week's pivot. If you listened to anything I had to say last week, you probably made a lot of money if you were trading ES or leaning into ES levels to trade NQ. I have not moved this box. If you guys can go back and timestamp and look at my pivot from last week. The reason it was about 5 points wide was because I was leveraging the 60-50 strike in SPX to kind of act as my pivot. And as that spread shrinks, that's why it was basically 5 points wide. So I started basically at the early part of the week saying 60-60. And then as that spread gets closer, as we get closer to rollover, that spread is going to be 0 in theory. So that number will shrink, within a couple points. So hence why it was 5 points. But if you use that to kind of guide some of your decision making or lean to that levels, you probably had a very good week. Because if you remember last Sunday, we opened up here around 6,100. And we kind of just chopped around for a little bit, sold off towards the open, and then pretty much we're just like balancing in a wider D-shaped distribution all of last week. But if you recall, this 60-50 strike on SPX, which is that 60-60 level, to 60-55 level, kind of acted as support and resistance on both sides of the tape throughout the week. So if it ain't broke, don't fix it with a rollover in the early part of this week. And I say this with a grain of salt because going into Wednesday with FOMC, throw everything out because anything can happen. If they were to not cut, which I don't think they're going to not do because they haven't given any indication of them pausing in December, but who knows? If they were to do that, everything could get a little wonky with how positions are shifting and how hedging going into that may be or after it. So just knowing that going into the early part of this week, all I'm going to do, I'm not kidding, is basically just shift this down to what is basically going to be kind of this 53s to 50 spot. 60-55s to basically 60-50 even as we get closer towards the actual kind of contract rollover and the options expiration. So just know that I'm not really changing a whole lot this week. It's still going to probably be that. So the logic is kind of ignore it for ES, and because if we roll to the H contract, it's going to be a little less relevant as far as an exact number because we're all going to be trading H. So this won't make any sense. But what I would tell you to do is, like I said, I'm going to be using that 60-50 strike on SPX to kind of act as my pivot based on where the H contract probably by the middle of the week may be trading and, kind of utilizing that as my, support and resistance. And the reason being is the options data going into or at the close on Friday, you've got two very large pools of liquidity. You've got 6,000 SPX and 6,100 SPX, and then a big mess at 60-50, which is why we're just kind of chopping and no side is really winning. We're just basically wedged between those two largest strikes. and the options sellers, the premium harvesters, the theta kings, as you might call them, were winning last week. Basically, if you were betting on some downside to 6,000 or some upside to 6,100 and you were selling premium on both sides of that, you made a lot of money last week. So that is kind of the logic behind, my pivot for this week. But if we were to lose that spot, the most logical place we're going, and I think even looking at some data this weekend, I was seeing it could still be a pretty tight range. So I was seeing somewhere between like 70, 80 is like the implied move with options and other things. So if you were to lose 60, 50, where are we going? You're probably going down towards, at the absolute extreme of this week, somewhere down towards, 59.80s. That would be if you got through 6,000 as the option strike for the week. So I don't know if we're necessarily going to do that, but utilizing this pivot, it is last week's value area low, and that worked in the previous week. So the same case is here. But that being said, if we start to build momentum back above like 60, 70s on the Z contract, I would not be shocked to see a trip back up to 6,100. I know it acted as a lot of resistance come here towards the 80s and 70s, and it kept kind of being a great place to potentially short this back down towards 660s. But the more we build above kind of last week's point of control, I would assume we may go retest the highs of this kind of last week, 2-week range we've been in. So you got to keep that in mind. I do think, 100 points, both sides of that 50 strike, not 100 points. So basically another 50 points either direction makes a lot of sense, with the kind of the max upside being, go hit an air horn, go to maybe 61.20s or go down to 59.80s. It makes perfect sense, just given the options activity that I'm kind of looking at and seeing of where we could go, just knowing we may consolidate and chop and, kind of be pushed around a little bit by some very large institutions, either rolling positions or positioning for FOMC, or just normal end of the year, end of the quarter options expiration, BS that tends to happen during this week. So this is a great week if you are not comfortable, trading these, event volatility, but just options weeks tend to be very just difficult to trade as it is. This is not when I would tell you to start, with FOMC kind of smacked in the middle of it and us going into rollover and everything else. So just be aware. This may be a weird week, but it is the last trading week, the last full trading week of the year. So we'll have some fun. I think it could end up being a great trade. I'm super optimistic. This will probably be my last, real good week of trading. I don't know how much I'm going to do next week. I tend to wind things down around Christmas. I'm usually traveling back to California to see family, but not this year with the baby. We won't be going anywhere. And I always laugh that like I'm in the airport and see us like melting down on Christmas Eve for some reason, at least the last 2 years it seemed. And I was sitting with my dad, I think on the 26th too. And I was screaming, like everyone was like really low on Tesla. It was like sitting right above 100. And I was like, it might be time to buy it. And I didn't, but that was last December when you really think about it, which is just absolutely insane. And now with it making almost like a meme of hitting a high at whatever it was, like 420, which of course it is. But anyway, let's jump over to NQ here before we get to the cash open here for Globex. NQ, this was a little weird last week with the kind of divergence we saw between ES and NQ at times during last week's sessions. NQ closed near the highs. ES closed near the lows. I don't know much to make out of that outside of the Broadcom earnings on Thursday, basically just keeping NQ afloat and kind of putting a pump into the semis. And we'll talk about Micron's earnings this week too. And the same could be true. I think Broadcom missed on revenue and it still didn't matter. They were up like 13%. I think the implied move on Micron this week is like 11%. So just another thing to keep in the back of your mind on how much any of the larger names in the semiconductor space can move the whole index. And I still don't know if it's 100% true. Didn't, whatever it's called. Now I'm totally blanking. My brain has like turned off today. MicroStrategy, right? Didn't they just get added to the NASDAQ? They did. Someone please correct me if that's not actually true, because I keep seeing it on Twitter. So if they are actually going to be added to the NASDAQ 100, God help us. But anyway, looking at NQ, closing near the highs with just the level of bullishness in the semis and everything else, it's hard to get too bearish. What I would expect, if you got any weakness out of the gate or any sort of sell this week, I could see us completely unwinding back down towards 21,500, perhaps even all the way down towards 21,000. If you really got any sort of sell, if ES was rolling over towards 6,000, that's probably where you'd find buyers in NQ. Would be back towards 21,000. That'd probably be, you know, I'm not catching the knife if we were to lose 21,500. I'm probably looking for this to roll at least to the 250 spot before I'd really want to buy it. But last week we had talked about, you know, not catching the knife below, I think it was 450s. Well, we pretty much put in a bottom there, somewhere, whatever was the low, around 350s. Yeah. So the same thing is true this week. You could still find buyers kind of in those low fours, the 370s, 380s spot, continuing to defend, step in and buy there if you got a real sell down. So, but below 400s, I'm not really looking to be a hero. I might want to see if this winds all the way back towards the kind of that 250 spot that we were talking about, potentially the, you know, the overall low of last week. And that would be 2 Sundays ago, or 2 weeks ago rather, the value area low too. So I could see very much that being potentially the case. We'll have to wait and see. Knowing what's going on this week, and you guys know the way NQ moves, 800 points, 1,000 points in a session is not weird, given FOMC, given everything else that could happen this week with options expiration. So, look, I mean, just like anything else, you could buy it at the all-time high, but you guys know me, I am a much bigger fan at looking for a buy at lower prices and not being the first hero to try to, you know, catch the knife. So if we were to break out above here, I mean, who knows where we go at this point if Micron has positive earnings and we are not selling down to start the week. But I would not be shocked if options kind of keep us wedged in this last 2 weeks of value, somewhere between, like I said, 250s to all the way up here. Who knows? Maybe we go tag 22,000. Kind of we did open. We did gap up very slightly on ES. Did we do it on NQ as well? Maybe not even a gap. I don't know if I can call that a gap. But still pretty much right around where we kind of were ending the session on Friday. Basically 21,775s on NQ, and ES trading roughly around 60.55. So right around my weekly pivot so far. We're just going to be hanging out, which no surprise, that would be the big options, or one of the big option strikes of this week. And basically was acting as support and resistance for last week. So nothing crazy there. All right, let's jump over to GC. I actually am in a combine, so I can show you data. I do have GC data. I don't have CL data for some reason in my Topstep Live account. So hopefully this actually loads right now. Okay, let's see what happens. Bear with me, guys. Trying to get data to refresh. Let's try my live account. Anybody else not getting GC to load in Topstep X, or just me? Okay. There we go. Sometimes you just need to refresh and refresh. Let's jump over to a 1 hour. There we go. Now we're good. Now we're cooking. Okie dokie. Sorry about that. Zoom in a little bit. So we were talking last Sunday in GC specifically around finally breaking out of this kind of couple weeks of balance that we were in. And I was saying, you know, looking for long somewhere between 25.50s to 25.40s. And if you took that trade in the early part of the week, it probably was a very happy happy-go-lucky start to your trading week, because we just shot up well past where I think even my screenshot targets were talking about, which was, I think, up toward 2719s, 2720s was kind of my initial target. Yeah, that's basically where, and then acted as resistance after, or support, excuse me, once we kind of pierced through it. And then we sold down. So we couldn't break back above this old consolidation range going back to, what is that, October, where we were kind of chopping around just below the 2800 spot. So we didn't even get to retest there. We kind of rejected off the bottom end of, those candlesticks going back to October. So now we're right back in that same range, in the 2660s, 2650s. And the same is true here. I'm still looking to be a buyer in gold near some of these lows. Obviously, given that we've continued to kind of sell off and we just rejected off there basically for a second time, going back to the end of November, kind of got to that same general area in the 750s and rejected and sold back into this new balance spot in the mid 26s. So once again, I would still probably be looking to catch the knife somewhere in the 30s to 40 range. Maybe not the 30s, but somewhere between kind of that 40 to 50 spot again. But I am a little more cautious now that this is the second rejection in the last few weeks of that kind of higher area of value that we were in going back into, October. So something to keep in mind is where we closed. So we closed basically where we opened from last Sunday. So I'm not going to be the first person to try to long it here. I would much rather see, do we start to see buyers defend this area, step in, and maybe push us back up towards that 2700 spot to potentially cover a long trade in GC. If you were to lose it down here in the 2630s, we're probably going to rotate back towards this area here between 2600 and 2580, 85s, 80s. Yeah, more like 2590s. So somewhere between 26 and 2590 would be potentially where we go if you kind of lose this this value area here between the 2640s and maybe the 2630s type spot. But as you guys know, for weeks I've been screaming to be long gold, and I wish I was holding more of it, to be honest. So same thing's true here. I'm not necessarily interested right here in this general area, just given all of the chop and consolidation. So between kind of this 2670s to 2655s, would be a little hands off, just kind of waiting and seeing what happens. But if we got a little lower and I saw buyers trying to defend the 2650 spot, happily get long there. And potentially, if you were to go all the way back down to the evening of the birth of my child, it would be right around the 2550s to 2560s, where I tried a long and covered way too early. But that is what it is. So that's GC. The same is true. Like I said, I'm looking for longs, but I don't want to really have any interest in the middle of this larger value area here on the right. Like right at that point of control, I have no interest. But we'll see what happens as the early parts of this week evolve. But as always, I'm still as bullish metals as I've been. Just waiting for that potential rotation out of Bitcoin back into gold. We'll see if it ever happens. Probably not. CL finally, potentially, maybe breaking out of this months-long value area between 68s and 72s. I'm going to be optimistic that it's finally going to happen, guys. I like this. I like this pattern from last week. Maybe we don't reject off here at 71s and fall back into this multi-week value area that we just refuse to leave. So I would love to see this finally break out and give a true break of a trend on the 4 hour, and us start to actually do something in Crude to actively trade rather than kind of hope you're on the right side of one of these moves any given week. But you have to be conscious of us being, once again, at the top end of this range from going back weeks, months, even that, this kind of 7150 spot, we have sold off all the way up to 72s. We have sold off and sold off hard from numerous times. So even though we may finally be breaking out here, you have to be conscious and be aware and potentially take the short side of this range play if we are just going to continue to kind of be in this longer time frame downtrend. And look at that. I say this, and as crude is slowly starting to sell off since the open a few points. But you have to just kind of maybe take that trade, because you could play the breakout side of it, but you've been punished for trying it the last month or so, 2 months even, as we've gotten to the 71, 72 spot. So just be aware, as much as I would love to finally break out of this range, it could very easily sell back down. And you know where we may go is all the way back towards 69, 68.50s. It's still just such a hot mess. And then even looking at on the 4-hour chart, whoa, that was weird. Even on the 4-hour, I mean, you're still in a downtrend here. We're still continuing to kind of consolidate near these lows, but I would really hope maybe we break out of this and finally go back, maybe retest up towards 75, 74s. If you were to finally push through and break out of this, that's where I could see us going. But if not, all we do is rotate back down towards the 68s to 67 spot, which I think nobody wants to see, because this has been just the absolute nightmare to trade. Has anyone made money with crude recently? Like, if you have you just caught the right move at the right time? It's just weeks of consolidation and, range of a few dollars, and not something that I've been jumping out of my chair to actively want to trade here in and here out. So if you've caught a good crude trade this week, put in the chat. I would like to commend you for either your resilience to whatever the hell this has been, or even, having a little bit of luck on your side to just finally catching a decent trending move and not getting caught in this section that just chops around, about a point. Yeah, selling down so far. Yeah, a couple people have taken some trades, so good for you guys. I still won't touch this, but like I said, I would probably be hoping or praying. Maybe it's just the trader in me who's just like, for the love of God, can we leave this range? Because when we finally do, maybe it's a violent move that we can actively just jump along with and ride with minimal moves against your entry, because you just seem to, finally be on the right side of momentum as it's finally going to break out of this. Who knows? Knowing me, it's going to roll down to 68s and make everybody upset. Let's check in on ES. Have not left that area thus far. Yep. So still stuck right around that 60-50 SPX strike. So I would imagine we may, who knows? We'll see what happens in Globex, but we just can't seem to drift too far from some of these larger strikes. So let's jump over to some earnings. And as I said, guys, if you have questions on anything I've gone over thus far, feel free to throw it in the chat. I will get to it as we go through some earnings, go through some data, go through some options data, and we will talk about whatever you guys want to talk about. But yeah, let's jump over to some earnings. So the last full week of trading for the year, we do have some larger names reporting this week. The biggest ones to be aware of is going to be Wednesday after the close with Micron reporting. So if you don't know what Micron is, they make a lot of chips and different parts in the semi space. Specifically, I have in my little PC laptop, I do have a couple of their RAM chips in there. So we'll see how they actually report. They have a tendency to move the market the same way every other large name in the space does. So if they're anything like the reaction that we saw on Thursday with Broadcom, don't be holding positions after hours, and maybe don't fade the move in Globex or the direction specifically there. And then on Thursday, the other two to watch are going to be Nike and FedEx. They won't move the market the same way, but they do have a good pulse on, obviously the consumer in some capacity, how many packages are being shipped, as well as just, Nike is always a good reading on kind of the average consumer on if they're actually spending, what's being purchased, things like that. So, and I think Nike's earnings were pretty poor last time. I'll have to double check, but I don't think it was the biggest ovation for their earnings last quarter. But I could be wrong. That might have been 2 quarters ago. My brain is a little bit of a mess these days. But other than that, if you're still holding Carnival going back to COVID, good for you. I don't even know what they're trading at these days, but it's a pretty light week outside of Micron and obviously, like I said, FedEx and Nike. So we'll see what happens, but Micron's the only one that's going to really move the market unless FedEx, for example, were to report extremely poor earnings or give a very poor guide on, the state of the consumer or anything else, but I highly doubt it. Actually kind of fun. Earnings Whisper did this little holiday with snowflakes and stuff. Isn't that fun? So yeah, that's the gist. General Mills, Accenture, nothing else is really going to do a whole lot for us as individual traders of futures. So we'll jump over to not earnings. I just said earnings. We'll jump over to data. So going into this week, there are some big things going on every day of the week. So just be aware if you're trading pre-market or trading in the afternoon on Wednesday, maybe isn't the best day to do it. But going into tomorrow's session, we do have the Empire State Manufacturing as well as the Flash PMI in the early parts of this session. So we do have PMI coming out 15 minutes after the bell tomorrow morning. So just be aware if you trade the opens or you're trying to find a trade, maybe it's best to wait till the dust settles after PMI before you jump into something. And then we have a 3 and 6 month bill auction. Going into Tuesday, you have retail sales. Retail sales is the big one. And then Wednesday, building permits, as well as the elephant in the room being what does Daddy Powell have to say and what is the actual rate decision for the end of the year. Everything is still forecasting a 25 basis point cut. But I have absolutely no idea what they're going to do. If I was a betting man, as you know I am, I'd be betting on the cut. I would be shocked if they shock all of us and pause personally, but weirder things have happened. As always, they like to say they're data dependent, but it doesn't really seem like that anymore. I think they're just on a path and a trajectory, and I don't think anything's really going to change it at this time. They're just, it's been mission accomplished with the Fed for almost about a year now, when Powell did, I think, last November, basically saying inflation defeated. And yet here we are still with inflation over 3% for basically about a year. So I haven't really seen a ton of progress, but hey, they're still going to be doing their cutting cycle. So it is what it is. They're allegedly smarter people than I am and all of us. And maybe it ends up working out. Maybe they get this mythical soft landing that they have been trying and alluding to since 2021. Who knows? I do remember them saying inflation was transitory. Everyone remember that fun word? So yeah, FOMC on Wednesday. I know we'll be breaking it down live on TopstepTV. So just be aware, 1 p.m. Central. We will have the rate decision, and then Powell's press conference, everybody's favorite trading of power hour, will occur shortly thereafter. Usually goes about 30 minutes into power hour, and you kind of gives just multiple trades. You get the initial reaction off the rate decision, and then you get Powell's press conference questions, and then once he stops talking, you usually get another move. And a lot of the time that move is to the downside for some reason. Regardless of how high or fast we have moved, there usually is another move. So who knows, man? Going into the end of the year, them forecasting another cut, I don't know. I guess I sit here and think, it's pretty telegraphed what they're going to do. It's pretty telegraphed what they've wanted to do, and they talk about it, and then they do the exact thing, and the market still reacts like it is surprised and moves very bullishly or whatever it is. The reaction sometimes, it's just like, it was exactly what they said. And Powell doesn't say anything in his press conference that's groundbreaking or any new information. Even the dot plot is exactly what you'd kind of expect from, how the Fed members are projecting kind of future cuts going into the next year or 2 years, whatever it is. Like, nothing is earth-shatteringly different than what the market should be expecting, but we still move, like a bull in a china shop, it seems, to the upside and then to the downside and then back to the upside. And it's just the algos being algos, I guess. But with it being wedged within an options expiration week and us at all-time highs, I have no idea what we're going to do. We could blast through to 6,200 for all I know, or we could, break below 6,000 and maybe give us something good to trade for the early parts of January if we're not trading at all-time highs. It just tends to, kind of be range bound, drifting higher versus actually providing some good bi-directional trading opportunities, even like Friday's session did in part. So I'm all for volatility. That's all I'm saying as a trader. So hopefully we don't just continue to kind of slow grind, move up into the right on low volume into the end of the year. So maybe something comes out of this that gives us something good to trade. I do not recommend trading FOMC if you've never traded it. If you really would like to screw around with some crazy volatility and screwing around trading against algorithms and things like that, flip on your practice account and just have some fun throwing on, a one lot and just kind of seeing the way it moves. It's insane, but I do not recommend anyone actually putting capital at risk during the, between 1 p.m. and the 3 p.m. close. It's just a good way to get hurt, guys. I'm not a fan of trading news, but I have been known to trade the fallout of it. FOMC, I usually do not trade that well. I've caught a few moves here and there, but most of the time I end up just giving back gains from earlier in the session. So I guess I've matured in my trading a little bit to just leave it alone. There's another day to come back. If you get some points early part in the session, there's no one's going to fault you for hitting the lockout button and, kind of preserving that capital. That's what I recommend the last good trading week of the year. And then you can not be upset going into the Christmas holiday or into New Year's thinking, hey, I've had a bad, I finished the year red, or I had a bad, end of the year. It's a good time if you get some points early part of this week, maybe lock it up, maybe call it a year, maybe come back, January 2nd, whatever, ready to kind of attack things and implement new things or whatever you've been trying to work on or focus on. I'm a big fan of kind of actually taking some time, spending some time with family, enjoying the holiday. There's always going to be another day to trade. So don't blow up your year or ruin the end of your year. Trading FOMC is my guidance. And then going into Thursday, we have GDP and initial jobless claims. We have core PCE quarter over quarter. We have Philly Fed, and then existing home sales. So a gaggle of random news events dropping at 7:30 on Thursday. So good luck trying to dissect what the market is reacting towards with all of these different releases coming out at the same time. And then Friday, the biggest data dependent indicator is going to be core PCE for the Fed. I don't know how much it matters anymore because they're still cutting and we still are pretty much stagnant on inflation being defeated, despite it being defeated well over a year ago, allegedly. So we'll have to see what that looks like. And then everyone's favorite seizure, while we all forget about it, is going to be Michigan consumer sentiment at 9 a.m. on Friday. Everyone always forgets about it, but it does tend to cause a reaction, at least in the initial release. So just be aware if you're trading on Friday too. If you think you're out of the woods, that's one we always tend to forget about and get stopped out and get pissed off about. Andrew's got the right idea. I'll be watching FOMC from 30,000 feet. You say that as if I don't have friends and degenerates, trading buddies that have traded on pretty crappy airplane Wi-Fi and have lived to tell the tale, or others that have gone into some of the transit systems in London, like on trains and things that go underground, and have had positions on with stops and have woken up, not woken up, but have come out of the tunnel to a stop out or a stop that didn't trigger or to a very green trade. So yeah, that's the gist of news and data for this week. I know it's a lot, guys, so just be aware there is something every day that's going to cause a headache or stop you out of a trade that you're maybe not expecting. So if you stay out of FOMC, if you stay out of the 730 trade, you pretty much are, you're relatively out of the woods. But just be aware, there's a lot of things going on this week. So, and then that's on top of just rollover and options expiration too. So we may get some weird movement this week. I'm optimistic that it could be positive volatility. I know Dakota and I have talked together about there's good volatility and bad volatility. So hopefully maybe some of these events and the fallout of them causes some good volatility, some good trading opportunities, but a lot of the time, these things can just be annoying. So we'll have to see. But FOMC, Wednesday, 1 o'clock. I don't want to see anyone blowing their accounts because they were trading FOMC. Lock out, use a combine, use a practice account if you want to have some fun. If not, hang out with us on TopstepTV. I'm sure Rips or somebody's going to be covering it, having some fun and giving some good commentary on, what's going on as it's going on. And during the press conference, as always, is usually good comedy with some of the very generic questions that our favorite financial journalists like to ask, instead of getting down to the nitty gritty of the real questions, which is, why have we had inflation of over 3% for a year straight when inflation's been defeated as of last November? So that would be my question directly to Powell, but I guess we're not going to get that type of transparency from our favorite talking feds. Anyway, let's jump over to some options data. How about that? So we have continued to talk about the largest net gamma strike is still sitting at 6,100, but the better thing to look at going into options expiration is where are we right now and what are the kind of biggest strikes? This is what I was talking about as far as the kind of the implied move or the range that we may be in this week. I'd be shocked to see us break out of SPX 6,100 or below SPX 6,000. And the reason being, if you guys remember last Sunday, we were talking about 6,000 being kind of this massive options activity strike. Obviously the big round number, the big historic number that we're going to break above 6,000. Everyone got their S&P 6,000 hats and things like that. So naturally the big psychological, century number, not century, millennial number. I don't know, whatever 1,000 is technically. But yeah, so when you have those, it tends to be very difficult to really break away from it. And I expect at least once during this week, we may go down and tag it personally. Just given the options activity, I would not be shocked if we came down, pinged it once, and then maybe even went back all the way up to 6,100. 6,100, yes. But given that the pivot is dead smack in the middle for me this week, you may be in a range-bound, weird type of movement where we're just kind of, wedged until something happens, and that something could be the reaction to FOMC. It could be repositioning. It could be rollover. There are things that could break us out of this kind of 100-point range that we've been in for weeks or 2 weeks. But it just tends to, either one of these could act as a magnet. All three of these could act as a magnet throughout the week. So 60-50, 6,100, and 6,000. So the logic would be to lean into them as we, get closer, maybe use them as a magnet, maybe use it as resistance, maybe use it as support. You kind of see what I'm saying here, given what the data that I'm kind of looking at and what we've been seeing for the last few weeks, which there was a reason my pivot of 60-60s and then 60-55s as we got towards the end of the week kind of worked. And the logic was, it's as stupid as it is, that options really move the market more than I think a lot of us care to admit or even care to notice at times, especially as we drift towards the quarterly expirations, the monthly expirations, and things like that. So 1,000 equals a millennium. There we go. So thank you for the chat, always providing me with the insight as my brain is sometimes trying to process this in real time with y'all. Okay, so just given that, it's the same thing. We're smack dead in the middle. So if we were to lose 60-50, maybe we go down and tag 6,000 as we continue to kind of hold and have support here. Maybe we go ride it all the way up to 6,100. But given that we continue to reject off some of these higher strikes, I'm conscious of 60-80s, 60-70s on the Z contract because we continued last week. If you were looking at my chart in Topstep, we continued to kind of just reoffer at those spots and move down lower towards this 60-50 strike. So just be aware. It's a good time to, size down, see if you can catch a wider move on some of these, just given we may kind of be tightly range bound. So if you can catch a smaller size long near the bottom edges or the top edge of this range for a short, maybe size down and where you're wrong, but see if you can catch a larger move, just seeing where, the 60-80s, is the 85 spot is acted as support and resistance. And as it flips, you kind of see what I'm saying. But the more we build above 60, 65, 60, 70s, the more I kind of want to be long for that trip back up to 6,100 personally. And like I said, everything could be erased at these levels, guys. I haven't checked the CME's website even to start a Globex here. TopstepX has not rolled over yet, so I would imagine by Tuesday we're probably all talking about the H contract. I've already not rolled over, but I've added it to all of my charts to at least visually see going into this week, so I have an idea of what's going on, what we're doing, and how the spread may shift, and what it all looks like going into the week. So yeah, let's get to some questions, guys. If you have any, throw them in the chat. I don't see that many that have come in already, but please throw them in there. If there's something you want me to go over, talk further about, or dive in a little deeper on, I'm happy to do it. And then we can recap the prep for ES and NQ, and I will send you all on your way to enjoy the rest of your Sunday. So, let's talk about something fun. How about that? Everyone see this? We got a new feature as far as ways that you can become your own risk manager inside of TopstepX. The newest feature is these trade limits. Over here on the right, you can set the maximum trades per day, the maximum trades per week. So if you are somebody that overtrades because you trade, micros and you're even trading minis and you just kind of casually add singles here and there, this is something to be aware of if you're going to play around with this feature. Maximum trades per day. This can actually lock you out if you have taken, more than X in a day, in a week, keep you from overtrading. I actually like this idea. For me, I am very much a 3 strikes and you're out kind of trader. And I, know my risk, know my size. So me getting into an extra trade, if I've been scratching trades, is still a good idea, because I firmly believe let's say you've been scratching trades and you've taken, in your opinion, what are good trade setups, the right setups, your plan, your strategy, and you kind of are scratching, or you've had losing days, or you've taken 1 or 2 winners, that probability of continuing to find another A+ setup goes down, I think, every single trade. It's so hard to be right once a day. And I think the more you roll that dice, that statistical, how I guess you're winning trades and things like that, eventually it kind of breaks down in that vacuum. So this is a cool new feature just to kind of set a lockout, and you could be pretty high. I mean, if you're doing single ads on like micros, I would have a good idea of how many trades that actually looks like for you before you try to set this, because if you are that kind of person that continues to, if you're a hyper scalper kind of person, you do it with micros, you could rack up trades pretty dang quick without realizing how many trades you may actually be taking in a day. So just be aware of that, especially if you're going to set the maximum per week, because you may accidentally lock yourself out if you have no idea how many trades you actually be taking a day when you are adding one micro and building into position. So be aware of that. But I do like this because for me, I know for the way I trade with my risk settings and trading minis, if I take more than like 6 trades in a day, I should be done. Like there's no question, because I'm not somebody that continues to just throw on a trade for the sake of throwing on a trade. So for me, anything more than 10, I have no business still being sitting at my desk looking at charts, because I have probably already missed my best setup of the day and then took a crappy one, and then there may be 1 or 2 maybe good ones left in the session that I could be sitting there for. But usually for me, once we get past Euro close, I like the time lockout personally a little better, but because I don't take a lot of trades, and I usually know if I've taken a few and we're getting later in the session, I should just be done anyway. But this is a really cool new feature, so play around with it, see how you like it. But I would tell you to look at your statistics too. See how many trades you are actively taking in a session, and then kind of, maybe find a good average that you're doing, before you lock yourself out accidentally, because you thought you only take 20 and then, you do something. So go look at your statistics, go look at how many trades you average taking a day. And if you are taking a ton and you, let's say, are having a good streak of red days, or you take a significantly more amount of trades on your red days than you do your green days, maybe that's something you should throw in here on the trade limits. Look at what is the maximum trades you're taking on your green days rather than your red days, and, kind of meet in the middle, maybe as far as before you start spiraling and taking it a little too far. But yeah, cool new feature. I love that Topstep keeps adding more personal control over, how you want to manage your risks. Since obviously you can set your own daily loss limit. now you can really kind of be your own risk manager. So this is really cool. The more things they add, the easier it is for everybody. Trades very different. So this is a good way for you to manage your risk different than maybe some other people do. Other people may focus on dollar values, but focusing on the amount of trades you're taking per day is another way to look at it. All right. So let's get to some questions. Nick, any suggestions on markets that have better volume on Sunday open usually? I primarily trade ES, looking to branch out a bit. I mean, I'm in the same boat as you. I trade the indices, and sometimes on Sundays they've got good volume, sometimes they don't. But you could look into, I know we don't have DAX features yet, but if you are US based, I mean, watch Dakota trade the Nikkei. See if that, does anything for you. If that excites you, given the way it moves, given that the Asian markets actually open here in a couple hours. So you will get a natural larger volume in those indexes than you may in the US based ones, just because Sunday opens can be volatile, but going into a week like this, I don't think it's going to be, a great trade personally. There may be something, maybe not. But the others, I mean, it just depends on kind of what's going on and the initial reaction going into Sunday. I'm a fan of not trading Sunday Globex, just unless there's news volatility over the weekend that can kind of pump some volume into this. But I'm not necessarily a momentum trader, but the way I trade, I need speed and volatility. I need movement. I need volume. So this slow, creep up a few points, 10, 20 points on NQ movements, it's tough for me to sit here and not start oversizing because I'm, trying to create P&L out of slow movement. So for me, it just does not fit my trading style. But check out those. You can check out the metals too. I mean, sometimes Crude and GC move a little better than the indices on the Sunday open, but sometimes they don't. It really just depends. So check out some other things. I mean, you could check out the metals. You could check out, at a time like this, check out micro Bitcoin. I mean, that thing's always moving over the weekend since it never really stops trading. So you could check it out and, see if that gives you the volatility or volume you're looking for as well. I'm not suggesting that anybody trade it because I did once and it is a bit of a fun, crazy instrument that I know nothing about or how to trade it, but I had fun one day doing it. So yeah, just play around. There's so many things inside of Topstep X that we can trade. You got micro Bitcoin. I mean, there's natural gas. Don't trade natural gas. Check out the Russell, check out YM. I mean, you can check out bonds, probably aren't moving, but there's so many things in here to at least throw on your chart or take a peek at during Sunday to kind of see what moves a little more on Sundays and just kind of get a perspective. You could trade currency, trade, the peso versus the dollar. You could trade the pound, whatever you want to do, but there are more things than just the indices. So I don't watch a ton, so I don't have a ton of advice or guidance for you, but see what else may move a little bit for you on Sundays. What causes the volume profile to change colors? So I have them set as two colors for you guys. But basically all it is differentiating the value area high and low from the actual value area. So all this is where basically 70% of the volume occurs in this value area here, and then roughly 15% and 15% will be in the value area low and the value area high. So that's all that really is. I keep them two colors for you guys just to visually have an understanding of that. But hopefully that's kind of helpful. It's pretty basic, but that's all it's telling you is that you're in a low volume node in the 30% spots. You have a high value area high up here, a value area low down here, and the major value area here. So 70% of the volume from last week traded between 60.87s and 60.55s, let's call it. So that's all it means. And when it changes color, it just means 15% roughly of the volume traded in that lower half and 15% traded in the higher half. And then the right-hand side volume profile is the visible range. So all it's doing is adjusting based on the candlesticks that are on the screen. So if you like volume profile or you've been curious on, I use it to guide a lot of my trading and prep. So you can throw this on your chart. It's just the visible range or the fixed range, which is all these weekly charts that I have on here. But I like to use them because I'm very much a volume-based trader. It's how I make a lot of decision making, and it's how I do my prep. It's how you can find, good support and resistance spots, good spots that we may break out of, and good places to enter trades. So if you're curious, there's a ton of free info and a lot of smarter people than me that have developed good strategies around using volume profile to guide trading. So highly recommend search on YouTube if you want to learn a little more, but it's a pretty good strategy to kind of tell you, what matters the most, which is what is going on in the auction and where are the most buyers and sellers and where are there very few buyers and sellers, because all this is based on is where volume took place based on price. Do you trade options? I do here and there. Some months, some weeks, some years, I trade more than others. Right now, I have not been trading as actively as it is. But no, I have not been trading as much options lately. But I do still dabble, I guess is what I'm saying. But do I trade options on futures or anything? No, I have never jumped into that pool of degeneracy, but who knows? We'll see what happens in the future. I've enjoyed futures more than options, which is why I got my start trading options. That's how I kind of learned outside of just being kind of a long only trader when I was, a lot younger. I dabbled in some degenerate options in, the 2018 to the COVID days and had some fun, but it is not my primary trading instrument. I just don't enjoy that headache sometimes. When I was working full time and had, stock units and things against my shares for said companies, I would sell calls every once in a while, but not a primary investing unit for myself. I know other people do, but it's just, I got enough distractions in my life, enough stress as it is. So I have dabbled a little less in options than I have in years past. Can you please talk about the volume profiles on your chart and how do you read them? I think we just did, but the logic is, guys, just to give you a quick 101 on volume profile, these red lines are the point of control, which will mean where the most volume by price basically transacted. So that last week, the most volume, so buying and selling took place at 60.72s. Or 61.75s, whatever it is. But right around there, the most buying and selling took place. So the most total volume on ES took place there last week. So all that means is, when you're looking at this, it just gives you a visual histogram by price of where the most or least volume for last week's sessions took place. And what we know is, just in basic theory of how the auction works for trading, we do not spend when there's not a ton of volume, when there's not a ton of sellers down here in this low volume node, we usually will drift to an area of higher volume. So there's no sellers down here, nobody really looking to get short in the market in these lower spots. That's tends to be why there's just not a lot of selling. There's not a lot of buying down here. There's just not a lot of open interest in, transacting in this area. So naturally we drift to areas where there is higher open interest, higher volume in transacting. So that's kind of what you would see in a value area. The more volume, the more interest in buying and selling in those areas, the wider this histogram, this value area becomes. And then when you get to the spot that had the most volume, you get a red point of control line, or at least that's how I have it set up. But that's how you can use it or think about it. We do not spend time in low volume areas. So that could mean it can act as support, or we can just blast through low volume areas and find an area of higher volume. So for example, you see here on the right around this kind of 40s to 50s spot, 45s, 50s, this low volume little nook that we see right here. It's possible if we see selling down here, we may blast through this little low volume area of about 20 points and go to an area of higher volume in the auction, or where there was a lot more interest in transacting. So between kind of this 28s to all the way down to 60-10s. So if you kind of lose this spot that were basically the lows of last week, it's possible buyers could step in and defend it again, but it's also possible we could just blast right through it and go to an area of higher volume down here. That's kind of how you can use it or think about it when looking at, conducting a plan for the week or how to trade based off of it. We just do not spend we do not spend a lot of time trading in areas of low volume. And exactly kind of how that concept makes sense is because there's no interest in trading there. There's no interest in selling there. Maybe interest in buying there, but those buyers stepped right in and scooped up everything they could at that lower price. That's kind of how it works. So I know that was a long-winded answer, but that's some basic understanding or basic principle behind how to use volume profile. I hope that's helpful, guys. All right. What will you be trading tomorrow morning? I'm going to be trading ES. I actually kind of want to stay away from NQ this week. I had said to a trading buddy of mine yesterday, I was like, if I just traded ES this week, I would have made so much money compared to, guys, I got stopped out. The Asia high on Thursday session Thursday night was like 769 on NQ. I got stopped out at 769 and we rolled over about 80 points and then we took off again. So I was short there. I got pissed off. There was a couple of trades like that where I was short near the high of the day. And I caught the knife too early, one of the other sessions, and just was like, why am I trading NQ? Because then I look at ES and yes, Nick made a plan and was using options and it made a lot of sense. And if I just kind of leaned into my levels, trading ES instead of getting whipsawed by NQ, I would have had a great week. Instead, I had a red week. So we'll bounce back this week, but it's just one of those things like my plan made so much sense in ES and I didn't really have a great strategy at NQ. And then the divergence happened too. So I was even trying to lean a little bit into some ES levels to trade NQ. And that divergence just like made my brain turn off at times. So I'm going to stick to trading ES. Like I said, I may be hands off a little bit tomorrow as I kind of watch and see what the contracts, how the contracts look on the H contract versus Z contract as far as volume. So we'll see kind of how that evolves, but I plan on trading at least ES in the early parts of this week, just knowing that I tend to have larger moves. I can tend to catch larger moves and let trades really play out in ES lately. NQ, I've been getting myself in a little trouble and re-entering too fast and just getting in my own way a little bit. So I'm going to get back to basics a little bit this week, finish the year out strong, hopefully, and, have some better trades, lean into some of my own prep and some things that make sense. Sometimes when you turn your brain off and you trade NQ and you have a red trade and then you see red and you can have a bad time. It's the equivalent of it's the tilt trade. NQ tends to make me a little more tilted when ES, let's say, isn't doing what NQ is doing and it's respecting levels and NQ is just off to the races at times and I'm using that logic to trade NQ. It's just like you get mad and get frustrated and you think you think you know what you're doing and you think it's going to work and it doesn't. So we'll have a good week this week. I'm very optimistic. But like I said, I'm going to trade a ES. If you see me trading NQ, please punch me in the face. Not kidding. Sometimes we need a little slap on the wrist. Last week was a good bit of medicine for me to just stick to my plan. Did you say how long you were? Wait, sorry. Did you say you were a long only trader? I mean that in the capacity of I had not discovered futures. I wasn't trading options. All I was doing is buying and holding equities, long, just single name stocks, things like that. When I was a lot younger, when I first started working, things like that. And I had no idea, even the thought of day trading full time to pay my bills and to live. So not like a long only trader. However, I do recommend if you are just starting out, do not try shorting. I do think it is the pain trade forever because you are just naturally competing against everybody and their mother's 401ks constantly buying. You're competing against passive flows. You're competing against option strikes higher. Everyone's valuations moving higher. So in a weird way, if you are more of a rotational trader like me, it is a fool's errand at times to be short this market. Especially in a year like this, you've been taking your medicine. You guys remember me in July. I took a lot of medicine before I finally caught a good trade and made back everything I lost. So it's a tougher trade. If you're still learning, if you're struggling to pass combines, if you've never thought about only looking for long trades, I would weirdly tell you to kind of try to wire your brain to potentially just try to do that for a session or two. It may help you. If you're constantly looking for both sides of the trade, it might just reaffirm your focus a little bit. And you also may just have a little bit of luck on your side with those flows that naturally just have the tendency to buy the dip. Shorting is just difficult, guys. So my advice, like I said, if you've struggled at times with combines or getting past or getting XFAs off the ground, maybe just not necessarily have a long only bias, but only be looking for setups to the long side in a session or in multiple sessions, and still use your same risk and things like that. Look for high quality setups. I'm not telling you just to blindly buy the all-time high and hope for the best. I'm telling you, you're on the side of momentum, just continuing to naturally buy the dip and everything that happens there. So if you are losing combines, blowing XFAs because you're shorting this market, my advice would be maybe flip that a little bit. I'm gonna get back to another question because I'm gonna look something up, because I do have a couple recommendations, but I gotta find them while I'm sitting here. Someone asked, do you have 5 books that you recommend? And I'm an audiobook person, especially trading stuff. But the couple that I have listened to recently, it depends if you're talking, because I listen to a little bit of everything. I'm listening to Cameron Hanes' book right now, but I'm a big fan of Jared Tendler's Mental Game of Trading. I do constantly listen to that one randomly. It's just a good audiobook to have in the back of your head. And just, sometimes when you're doing it, not running errands, but when you're doing things around the house, doing chores, cleaning, doing stuff, I'm a big audiobook person. So I try to find good ones that can just constantly be thrown on. So like I said, Jared Tendler's book is one of my favorites to listen to an audiobook. I'm enjoying Cameron Hanes' book. Endure is a good one. Mastering Trading Psychology is another one I'm still actively listening to. I'm a big fan of, I know people love him or hate him, but Can't Hurt Me by David Goggins is a great book that I have on audiobook. Thinking Fast and Slow is another good one that I have on here. Yeah, those are kind of, I guess, my current slate of audiobooks that are on rotation or that I've been listening to in the last few months. If anyone else has some good ones, I'm always in the market for some new ones. I'm weird with audiobooks though. If the narrator is not great, or I can't just tolerate their voice, maybe that's mean, I don't know. It's just there are some narrators that just don't resonate with me, and I'm like, an hour into the audiobook and I wish I would have just bought the hard copy and read it instead, just because sometimes it's just not the most engaging narrative voice to like listen to and retain information. I don't know. I'm weird, but I have that experience with audiobooks. So just keep that in mind. But yes, I do know David Goggins is an alien. Some people hate him. I love the guy. I think he's a fascinating human being. His story's really good. Both of his books are very good. So if you haven't read them, highly recommend them. They are very good audiobooks too, just because they kind of decompress after each chapter and dissect it a little bit and talk about it. So it's a different perspective too than probably the usual run of the mill of the way you read certain ones, but fascinating book just about, kind of overcoming different things in life. And so it has its application to your personal life, to trading, to anything, because it's really just about kind of that human condition and kind of achieving anything you really set your mind to. So recommend those too. But like I said, my favorite trading book is still Jared Tendler's, because I'm a big mental game kind of person. Maybe it's just the way I'm wired, but I think it has great application into the day-to-day. And I think it has great constant like reaffirmation. So like I said, I listen to it every year. I feel like when I'm putting up Christmas lights, because December is just always weird, or end of November is always weird. So for me, it always kind of reaffirms my focus a little bit. Nick, can you please explain how you better define levels? What do you pay attention to? So my biggest fuel for how I write levels or how I draw things on my charts is always going to come back to it's no magic secret or magic number or secret sauce. There's There's a little bit of that, but it has more to do with just another level of data with things like delta and time in sales that I sometimes look at and will throw on to a chart when it also fires at an MGI level. But most of my levels, like if I were to show you my 4-hour chart in TradingView, which I have to freaking rebuild because of rollover, because I always forget to take a screenshot. Anyway, when I place things on the chart, most of them are going to be market generated information. So value area highs from the previous week, previous session, points of control, everything is just can be produced. And the good news is if you're using Topstep X or you're using just about any trading platform, you can have these levels auto-populate on a lot of your charts with just about every charting software. I feel like there's indicators that will spit out market generated information. So the Topstep daily levels I have on, I like Hoag's secret sauce levels because he's been doing this a lot longer than I have. And I know he's got his secret sauce. I have a little bit of mine with other things that I plot that are not on necessarily Topstep X, but I keep them as on my longer time frame, like 4-hour charts. But these are good things that you can start to use. But 99% of the information that I input on mine has some level of MGI mixed with some aspect of price action. And when I say price action, it means I'm watching delta. I'm looking for icebergs. I'm looking for things that are happening on time and sales. I'm looking for large size market orders that come in at certain levels, because Coach Jay is the king of saying that level meant something to someone. So when I see delta flip, or I see an iceberg and I see a ton of market orders just firing in there and price reverses, and it happens to be, on Sunday when I look back at that level and it happens to be last week's value area low, that's something I will mark on a longer time frame chart, because that clearly meant something to someone. It could be just a larger institutional bracket order that's just sitting there, and they are, with options, for example, playing the premium play where they just want price to kind of continue to stay in the middle of two large strikes. I have no idea. It doesn't necessarily matter, but you see the way price moves at certain spots and the reaction that occurs when it does. There are some things that you kind of want to manually mark at times. And when you get more comfortable reading time and sales or watching price action and incorporating that with, reading candlestick patterns the way Dakota does, or using volume profile to do it the way I do, you kind of can create your own secret sauce. So there's a level that, I'm sure Hoag also throws into his weekly kickoff highs and lows that has something to do with, experience mixed with ATR, mixed with just something with, like he says, chicken bones and tea leaves and things, whatever it may be. But you kind of bring your own, if that makes any sense. Once you get comfortable with just the basics of market generated information, you can kind of throw your next level of spin on it just because of how comfortable you are reading certain things as they happen. And you start to recognize patterns when those things happen. And then you start to say, hey, I bet price does this next. And then you start to kind of get confidence in setting levels. Or like, I think price is going to reject at this spot. So you watch, you see it happens, and it's because you did prep. You have an understanding of, what may happen when price falls to that spot. Do we find buyers? Do we not? So yeah, that's a little gist, but for the most part, guys, plot MGI on your charts without creating too much noise or things like that. I think it is the easiest information that we can all take advantage of. That has a lot of success, to be honest. If you are somebody that trades breakouts, it's a good way to find where, hey, if price gets above this, it's probably off to the races kind of thing. So I'd highly recommend everybody doing that as you're continuing to learn how to prep. It's the easiest way to at least have some level of an understanding of where we are in the auction, where we may go, where price may return to. All right. Could you show the setup for the volume profile on the right side of your chart? Yeah. So it's the same thing as the other one. I think I go over this every week. So I use ticks. For ES, will use 4 ticks, so 1 point. You guys can set it as you see fit. I like to have it just look like a clean histogram. Volume is total, and then my value area is going to be 70%. So I keep it pretty basic for you guys. As you get more comfortable, you can find these low volume spots yourself. You should be able to kind of start visualizing how to do it. But as you're learning it, I highly recommend keeping the colors different so that you can understand where those areas are. All right. That was the last question. So we'll do a quick recap and I will send y'all on your way to enjoy your Sunday evening. This was a lot of talking. I feel like my voice is going here. I'm gonna get water before I do this recap. Everybody having fun? Hopefully this has been helpful, guys. Hopefully, like I said, if you listened to my plan last Sunday, you probably had a good week. I didn't listen to my own plan, traded NQ for some reason. But looking at this week, we are setting the weekly pivot at last week's value area low. So that is also last week's value area low, is basically 60/50s on SPX. So that other option strike that we're kind of glued to right now. If we were to lose this general area, lose this value area from last week, I would not be shocked to see a trip back down towards 6,000 SPX. Keep in mind, guys, we are talking about Z contract. Have not rolled over yet. We'll see what this all looks like tomorrow for the H contract potentially, but for the time being, we are doing this prep on Z, so it will adjust accordingly. But I would not be shocked to see some aspect of the 70 to 80 point range, given the options activity. Like you could see us pierce lower, maybe go all the way down to 59.80s, and then maybe all the way up to 61.20s, something in that range. 70 to 80 points, like I said, would not shock me. But the big strikes, basically where we're trading right now, around 60/50s and 6100s, 6103s roughly, probably, if I'm looking at the options until that spread is zero, and then all the way down to, near 6,000. So like I said, pivot's going to be there. If we start to build volume above 70, I don't really plan on fading it until at least kind of the 80s, 85s if we get another reoffer rejection in this general spot. But if not, if we continue to build volume of 70s, I would expect us to go make a new all-time high. Oh, dang it. Go make a new all-time high. There we go. Sorry. I had my sound effects on mute. So like I said, if we were to lose 60/50s down towards 6,000, maybe 59.80s, if we were to build above 70s, probably going towards 100 to 120 on ES, on NQ. Once again, we're at all-time highs. Basically, I don't really want to catch the knife if we were to lose kind of this 500s to 450 spot. We talked about it last Sunday. The same thing is true if we can kind of fall below that 420s to 400 spot. I would not be shocked to see us fully rotate, build some volume back down here below 300s, where I'd probably be looking to be a buyer somewhere in that kind of 250s to 220 range. So yeah, that is the prep, guys. Hope everyone had fun. Hope this was helpful. I hope everyone has a fantastic last full trading week with no interruptions, no holidays, no half days. And with FOMC and options expiration, who would have thunk it? The best worst week of 2024. It could be the best week, could be your worst week. So just be smart, guys. Have some fun. Trade safe. You won't see me on TopstepTV this week, so let's all have a safe, fun, profitable trading week. And I will be active, hopefully, and around a little bit in the TopstepTV chat. If not, everybody good luck. Have fun. Have a good night. Thank you for tuning in, and cheers.